I can definitely speak to how it works in the US, which is we have Fourth and Fifth Amendment protections, which basically says you don't have to testify against yourself. Any tax form that you send to the IRS can be used against you. So it would seem that you're violating your own rights by filing these taxes and paying these taxes. What they do is they say it's voluntary so that they don't have that charge, right? Now, of course, everyone's like, yeah, but it's not voluntary because I have to pay the tax or I'm going to go to jail. Well, this is the thing. Imagine you're driving in your car and you get pulled over. The cop comes to your window and says, do you know how fast you were going? And you say, well, if you don't remember, I'm not going to tell you, right? So you keep your mouth shut. But then your passenger says, yes, officer, I saw he was going 75 and speed limit's 35. Yeah, he was going 75. He was definitely speeding. There's a witness, a snitch, right? Who basically says, no, you're going to get that ticket. Now, the IRS works in the same way because they know everyone could just say, I'm not going to declare it. The IRS can't come along and declare it because they're not witnessing the transaction. They're not a part of it. They don't know, like I mentioned, $100. If I lend you 100 and you give it back to me, if they were to see me receiving $100, they can't say it's taxable because they don't know why I'm receiving it. Is it a loan repayment or did I, is it capital gains? What's it for? They would have to swear under oath that it is a taxable transaction, which means it's something of that nature. And they can't do that because they don't know. So what they do is they rely on the person who pays me. So that would be you or my employer or my, if I'm getting dividends from stock, my broker, right? They're expecting them to report this, right? And when they report it under penalty of perjury and say this is a taxable transaction. So essentially, and there's a lot more paperwork and bureaucracy to it, but essentially what I do is I go back to the IRS and I say, I understand that somebody swore under penalty of perjury, under oath, that they gave me money in part of a taxable transaction, but I'm disputing that that is valid. I have a problem with that. And I'm swearing under penalty of perjury that when they say it was taxable, I say it was not. So now the IRS has a problem where they say, okay, how do we know? How do we know this is taxable or not? Now they can drag someone from the broker into court or somebody from my company, from the HR department into court and have them say, testify, yes, it was a taxable transaction. Okay, well, is that a matter of fact or is that a matter of opinion? It's actually a matter of opinion. That they gave me money was a fact, right? But whether or not it was taxable is a matter of opinion as to whether, and even a court's ruling is called an opinion. So, its opinion is stronger than just like, I think it is, right?